and you guys watching. Okay, so big moves only happen when there's volume in the market, right? And when do we have volume in the market? We have volume in the market. You have pre-London session, you have London Open, you have pre-New York, you have New York Open, you have NYSE Open, you have London close, you have news happening, you have breaking events, and all these times when there's volume in the market, right? That's the only way when you're going to have a big candle forming. Now, right, first situation, candle closed above resistance. Now you have a very good opportunity to price to go up. Now, understand this. This is a wick. This is a big wick right here. We can form all sorts of candles, all sorts of things can form, you know, and this is a big wick. Whenever you have a big wick, we've talked about this in impulse entries, you can't take an impulse entry because if you're waiting for this candle to break above this high, then your entry is going to be too late. And sometimes it's going to happen. Sometimes what's going to happen is that you're going to have this candle just move up, break above this high, and then continue to go up. Okay? Now, was there an opportunity over here for you to give your trade a second chance? Your trade has to make sense, right? Logically, market structure, the way the candles are printing, they have to make sense. It's not all the time that you're going to have an opportunity to give your trade a second chance. It's not going to happen all the time. Sometimes it's going to happen. Well, I would say most times it's going to happen. I'd say maybe, you know, the probability, maybe 80% of the time, you're going to have an option to give your trade a second chance. The 20% of the time, you're not going to have an opportunity to give your trade a second chance. So this is when you're going to not have an opportunity to give your trade a second chance, because as we mentioned earlier, if this is a 40 pip range and now price has broken above this area, is this a good idea to take a buy at this point? Right? What did we learn in the previous sections? Is this a good idea when price is in the middle of a range? It's not. You know, a better idea would be for price to maybe be closer to this zone so that there's a high probability for it to continue pushing up. This is a situation where it may not work, and I really hope you guys are taking notes. Okay? Now, for example, let's say this wick right here, it was this big. You know, it wasn't that big of a wick. You know, it was this big wick, and if the next candle starts to break above this high to the left hand side, you can take an impulse entry. Because if we're now breaking above this high, we learned in impulse entries that this is now a really good probability for price to continue pushing up. Okay? This is a really good probability for price to continue pushing up. This is where you can give your trade a second chance. Second chance is that you give the first chance right here. After this confirmation, didn't work, you got stopped out, and now you're waiting for price to break above this high, and now you're giving your trade a second chance. Now, when you're talking about risk, let's say you're only giving your trade a second chance if you still have risk left in your day. That's why managing risk is really, really, really important. Let's say your total risk for the day was 2%, and you took a trade right here. Let's say you put like 1% risk there, and you manage risk. Instead of losing 1%, you lost 0.8%. So you still have 1.2% risk left. And now now it's up to you whether you want to use the full 1.2% risk or you want to use, let's say 1%, 0.5, whatever. That's totally up to you. But in essence, this is where you're giving your trade a second chance, and this also means that you're taking a second trade. Essentially, it's just a second trade. You know, your first try didn't work out, so now you waited for your second confirmation to show up, and you tried to give your trade a second chance. Okay? This only happens when price is trending. This only happens when there's volume in the market, right? So there are different situations, there are different ways that the candles can print and can give you these ideas that this may work in your favor. Okay, so we have to keep these things in mind. Giving your trade a second chance is a complicated idea. It takes a lot of practice. It takes a lot of sitting around and watching what price is doing, because here's the thing. Whenever you're going to take a trade, and in your eyes and in your mind, it's going to be a perfect trade, a perfect opportunity to execute. And if price doesn't work that way, all these emotions come in. All these emotions, you're thinking that, oh man, shit, I took a losing trade. Let me take a sell over here and win this trade because it's going down. No, keep the bias the same. just relax, calm down. And the first way to calm down is to manage risk. If you know that you have managed risk, if you know that you risked $100 and you've lost, let's say, $80 and $70 trying to take a buy, now you're perfectly fine. You're like, okay, you know what? I managed risk and I'm a mature, confident trader. I'm going to sit back and I'm going to see if price gives me a second chance for it to continue pushing up or not. Okay? And this is where these situations are where you can give price a second chance for it to continue pushing up. Okay? Now, there's another situation that happens, and we're going to talk about that as well. There's another situation that happens that, let's say, for example, we have support formed. We have support formed, and the next candle, it forms and it breaks the high. You're like, okay, perfect. We've broken the high. Now we're going to go up. But instead, it starts to break down. It breaks the low right here, and it still closes bullish. Okay, so we have a bullish candle closing. Let me make this a little bit better. That's not a bullish candle. That's a weird looking bullish candle. We have a bullish candle closing like this, right? We have a bullish candle closing like this, and you're like, oh man, you know what? I had a buy at this point. Price broke the high. I took a trade, and price came down. My stop loss was right here, and it hits a stop loss, and now I have a loss right here. And while you're crying about that loss, you see the next candle wicks down and continues to push up, and you're like, oh man, shit! If it didn't have hit my stop loss, I would have had a profitable trade. Now, just at this moment, a lot of you guys are thinking the same thing that I'm thinking, that okay, if you took a loss right here, and if you managed risk, and also remember, there's always a probability you're going to be able to manage risk. You're not going to be able to manage risk all the time. You're going to be able to manage the risk most of the time, and sometimes you're going to take the full risk on the chin, and that's totally fine to solve our probabilities. Now, you're thinking at this point is that, okay, maybe if this candle broke above this high, we could have taken an impulse entry and given that trade a second chance. And that exactly what we thought it was going to do, because now we gave a trade a second chance and we made some money, or we reduced some of the loss we had over here, or we put the risk that was left from this trade over to this trade, and now it basically worked out. Okay, so these are different scenarios, different things that can happen, and these are things that you notice in the market as you're trading them, because as you're sitting back and watching how price is moving, you're looking at candles, you're looking at the different way the candles are printing, and you're kind of like visualizing where you can see the next candle move, where you can see the next candle go. And once you start to do this for 3 months, 4 months, you start to have an intuition, is what I call, right? This intuition comes over time. Like after watching all we done over here, you're not going to be able to do or to give your trade a second chance maybe by tomorrow or next week or the week after that. It's going to take you maybe 1 month or 2 months to just kind of really absorb the information and keep watching how the candles are printing, and then you're going to be able to successfully give your trade a second chance. But listen, in the beginning, I wouldn't recommend for you to just jump in giving a trade a second chance, right? Take those losses, but manage your losses. And once price does something that we've discussed here, just take a mental trade. Take a mental trade and watch it. And don't take that mental trade stressing about, oh, I could have been in this trade. That's totally fine. That's totally fine, because you're still learning, you're still progressing, you're still adding these tools to your trading arsenal for you to be in profits in future, right? So this is all a mental investment that you're doing in yourself. So later on, once these situations happen, you're going to be able to execute on these, and someone new is going to look at you and say, oh, hey man, how are you able to do that? And you're going to say, oh, well, it's easy. Just give your trade a second chance. And they're going to say, oh, how? So these situations can also happen. Now, there's another situation that happens all the time, is when, the next candle breaks below the low and just continues to push up. These scenarios are where you can't really give your trade a second chance because there was no confirmation. And always remember, whenever you're giving a trade a second chance, there needs to be a confirmation. There needs to be a logical way where you can execute that trade. Okay? Very, very important. Giving your trades a second chance. And also rewatch this, right? The rules were you have to have the same bias. Don't change your bias. Changing your bias is going to be very, very risky. It's going to be detrimental to your mental health. It's going to be detrimental to your trading psychology as well. Never change your bias. I have a lot of people who can successfully give their trades a second chance. So there are different scenarios that we discussed over here. So what we're going to do now is we will go over how to add risk back to your trade. So we're going to go over that. How to add risk back to your trades.